So everyone talks about the big deduction, the 6,000 pound, where you're able to take the 179 and the bonus depreciation in order to reduce your income, right? But what people don't realize is that if you are not in business the next year, right, or if something happens that you may have to pay recapture, it's like the IRS isn't going to just let you take this big deduction this year because you're bonusing your depreciation. You're taking it all in the first year instead of spreading it out over the 5 years.
Over 50% of Black Americans are unmarried, and only 2% of Black families in America have a net worth over $1 million.
We are on our journey to not only join that 2%, but grow that 2%.
Facts. I'm Devon Truvel, creator of Black Wall Street, the board game, with my beautiful co-host.
I'm Sinclair, aka the Health Nerd.
And welcome to the M4 Show. Let's bring her in. Bring her in. What's going on, Miss Marjorie?
How are you guys doing? You guys are just too cute. I love it.
Thank you.
Come on with the compliments coming on in. We appreciate that.
I love it. I love it.
Yes, ma'am. So first off, before we hop into it, we got somehow connected. I forgot which post I put on there. Maybe you commented on it, but we got connected in that Black Riverside County group me, which is our Facebook group, which is an amazing group. Do you get like a lot of random shout outs or referrals from that group?
I am not real visible in the Black Riverside County Facebook group because I don't make myself visible. Not sure why, but I don't really make myself visible. I kind of comment on different things, but I don't always make it known that I'm a CPA. Something that I'm working on. I do get a lot of referrals from San Diego, though. So San Diego has a Black San Diego, I think it's Black San Diego County Facebook group, and so I have a lot of family in San Diego, and so they tend to shout me out a lot. So it's more them than me. But yeah, but I'll work on doing that. So yeah.
Yeah, well, we appreciate you commenting on our post. I think I was asking, like, how do you pay yourself from an LLC or something like that? And you went ahead and you dropped some wisdom and you said you'd be willing to come on. So boom, now we are here. So for the folks that, may be just getting introduced to you, do you mind giving a short introduction about maybe how long you've been in the CPA game and your favorite meal?
My favorite meal.
Yes, because we're foodies over here.
Okay, that's a good one. So I am, I've been a CPA since 2007. Been in Inland Empire since 2000. So like I said, from San Diego, born and raised in San Diego, attended San Diego State University, moved up here when I got married. My husband had a home in Lake Elsinore, so I moved up here. Prices were good, or all that stuff. So moved up here, and so I've been in public accounting since 2000, actually 2003, but I became licensed in 2007. So I worked with a lot of different small businesses, larger businesses. I worked in public accounting at a firm. Most recently, December of 2020, I went out on my own. So I have my own firm.
Nice.
Work from home primarily, have a lot of virtual clients nationwide. And but I work with all different type of clients when I was in public accounting. So partnerships, corporations, S corps, individuals with high net worth, just a lot of different things. And in December 2020, during the pandemic, I decided, after the pandemic and seeing a lot of individuals starting businesses, making a lot of money in the stock market, I just began to cringe because when you have a large sum of money in 1 year compared to the previous year, you're going to have to pay a lot of taxes. And if you don't plan for that accordingly, you're going to be, it's going to be a big surprise. So at that point, I started, I created a couple courses. I started my business and just went on Instagram and started educating individuals on what to do as a small business owner.
Love that.
Love the journey. You did, sprinkle in that you are married, so love the love as well.
Mhm.
Shout out to you and the hubby. Um, so something that I said at the beginning that I think you're going to agree with based on this story that you just said is
Right.
I think every family should have a business, right? Again, and any type of business, LLC, S corp, corporation, etc. As a CPA and someone who believes in entrepreneurship, possibly in building wealth.
Mhm.
What's your stance on that statement? Just no pressure.
I can say that I think that everyone should have a business. I will say multiple streams of income. So, multiple streams of income would be a
Mhm,
business, right? It could be a business. One of those streams could be a business. Having your own business affords a lot of different opportunities for building wealth, building generational wealth, right?
mhm,
Because you can have a business and you can pass it on to your children compared to having a job and not being able to pass that on. So, um, yes, I believe that every family should have a business, but I also want them to have the business and run their business like a business.
mm,
So you can't just start a business and just kind of be nilly willy with it. You need to run your business like a business. Take your time, set up
yeah.
your business correctly, make sure that you're being compliant with the tax laws, make sure that you're being educated on the
Mhm,
tax laws and tracking your income and expenses and just doing the things to run your business like a business.
Mm. Yep.
good.
That's necessary. And I feel like for a lot of folks when they start out, they may not have all that stuff figured out, but I think it's important. One of the important first steps to get that structure, for your business.
Right.
Speaking of structure,
Mhm.
can you quickly go over like what are kind of the main different business structures?
Yeah.
So the main business structures, which one that everyone knows is an LLC, right?
Mhm,
So you hear that taught, you hear everyone say it, form an LLC, form an LLC, form an LLC. An LLC, it's good for certain types of businesses. It's not good for every type of business. So that it's important that you formed an entity so you can establish yourself as a business, but you also need to know how that LLC is going to be taxed.
mm,
And we can talk about that. So then there's an LLC, there's a corporation, there's a C corporation, there's an S corporation, and there are partnerships. So all of those entities are taxed differently. So it's important to know how that entity is going to be taxed. An LLC, like I said, most people say it, but an LLC is a disregarded entity. So if I was to go and form an LLC, a single member LLC, just me, it's disregarded for federal purposes. So it's just like it's a sole proprietorship. So I report that on my individual tax return, but then in California, I still have to file a California return for the entity and pay that $800 tax too.
mm.
So
Every year, right?
every year, every year as an LLC. But for we're in 2022. So 2022 and 2023, if you form an LLC in California, you don't have to pay that first year $800. So for someone who's looking to form a business, an entity,
Mm.
that's a good thing to know. So
Do you know, is it something where you have to pay it back later? Is it like a deferment or it's like waived for the first
it's
year?
waived for the first year in California for these years. Yeah. So it's 21, 22, and 23. Yeah.
Nice. So there you go. If you're looking to start an LLC, these next few years are going to be the year to do it. Go ahead and save yourself $800. Now, other than LLC, right? What might be
Mhm.
another good structure for a married couple, right? So me and the queen, we want to start a business, t-shirt business, health coaching business, pool cleaning business, whatever it is. What's
Mhm.
another business structure we may want to look into?
So the other business structures are S corporations, which is a pass-through entity. So the S corporation is considered a separate entity, but the income still flows through on your individual tax return. But there are different advantages to having an S corporation. And I'm feeling as though we're going to kind of talk about that a little bit later. So I just
Mm,
want to just leave that. And then a C corporation, which is a totally separate entity, it doesn't pass through. All of the taxes are paid by the C corporation. And then you have a partnership. California is a community property state. So everything is divided between the two of you. So if you're a partner, if you and your wife are
everything.
partners, everything is it's still going to flow through to the individual return. So it's like it really doesn't make any difference to file it as a partnership in California. But keep
Mm,
in mind that, you form your entity for the liability protection, right? And then also to have it be recognized as a formal entity. So, you form your entity, then you can apply for business credit, you can get your business checking account, you can do
there
different
we go.
things. And, so that's one of the reasons for forming an entity. But then once you get your entity, it's like you want to make sure you have that conversation with someone before you just go out and form an entity. So for instance, if you're out there and you're purchasing real estate, most any CPA will tell you don't put real estate in a corporation. And the reason for that are there are additional taxes that you're going to pay on it as the property increases, or when you sell the property once it's increased in value. So they would recommend that you put it in an LLC, right? So that would be one thing to consider. But you also have to look at how you're going to be paid, if you're going to be paid, if your company is making enough money to pay you a salary, if you're willing to do the different things that you need to do in order to keep minutes, have meetings, you know file just the different reports. So there are different things to think about as you're forming your entity and running your business.
Yes, that I think that leads to the question that I asked on Facebook beautifully, right? You're good at this. I see you. You're good at this. So the question that I put on Facebook was, how do you what's the best way to pay yourself from your small business? Um, whether it is an LLC, S corp, corporation. So wanting to run that question by you again. You did give a good answer on the Facebook for the folks that aren't in that group. You can just give again your pros and cons of paying yourself in the different structures.
So when you say there's a difference between paying yourself and taking money out of your business, right?
Okay.
So if you are a single member LLC, okay, it's a disregarded entity, you cannot be an employee of your LLC, but you can take money out of your business as a draw. One of the things with the single member LLC is that you pay self-employment taxes on the net income of your business. When you file your individual tax return, that goes on your Schedule C. And then in addition to the tax that you pay on the total income, on your return,
Mhm.
you'll also pay self-employment tax. So if it's $100,000 of net income, you're going to pay an additional $15,000 in self-employment tax.
Gotcha.
So you can't pay yourself out of an LLC. You cannot pay yourself out of a partnership, right? Because you cannot be an employee. You can take guaranteed payments out of a partnership,
Mhm.
but you can't receive a paycheck. You can
Gotcha.
pay yourself out of an S corporation or a C corporation. So one of the requirements for being an S corporation is that you have to take a reasonable compensation.
Mhm.
There's no there's no magic calculation for reasonable compensation. It's what would be reasonable for someone that is performing the services that you're performing for your business. And it's required for an S corporation. So with an S corporation, you're going to pay the reasonable compensation, but the self-employment taxes that you would pay for a sole proprietorship, you won't have to pay that because it's paid in a different way. So you're an employee of your company. The employer is going to pay 7.65% of the self-employment tax. And then you as an employee are going to pay the other 7.65%. So it's just a way for you're still paying it, but you're paying it in a different way.
Yeah, professor, I have a question. I'm like, we are going into class right now. And I see a few people watching live. If y'all have any questions for our guest Marjorie here, feel free to put it in the comments, whether you're watching on YouTube or on Facebook. And we were putting her website down here. Queen, go ahead and read that website for me, please.
Marjorie, is it McPike?
Marjorie L.
Pikes,
McPike,
yeah.
CPA.
L McPike. I forgot the L.
CPA.com. There you go. I had to ask my wife because she has better eyes than I do. Make sure y'all go ahead and tap into the resource that she has. So my question is there a difference in the self-employment tax or just the approach that you would give for a couple or a person who has a 9 to 5 and has a side business versus a person who only has their own business? Hopefully that makes sense. If not, I can try to say it in a different
So
way. Oh, you try to take a sip of water for that. It's getting serious. It's
Yeah.
getting serious, y'all.
So it's a person who has their own business, a person who you and your wife in a company, person who's employee.
Yeah.
Excuse me.
Bless you. Bless you.
Look at it like this. If you are, when you become a corporation, you're a business, right?
Mm-hmm.
So it's just like you're working for anybody else. You are an employer. You're going to pay employer taxes. If you have an S corporation, you can set up a 401k plan. You, as an employee of your S corporation, can contribute to that 401k plan, right?
Mm-hmm.
You, as an employer of that corporation, can match that contribution, right? And all of these are different ways that you can reduce your tax liability. So if you're a single person, so there are people that are out there that are S corporations and it's just them.
Mm-hmm.
But they still have to pay themselves a salary. They can still set up a 401k. There are couples that are S corporation. You can do the same thing.
Mm-hmm.
So
I like
did
that.
I answer that one?
You did. I like that. I think the major value for me is that 401k to be able to set up your own retirement plan through your company and give that to yourself, to your partner and other employees. I think that's an incredibly powerful tool, personally.
Right.
Thank you for supporting the M4 show and our mission to increase the wealth of Black families.
If you received any value from this episode, any value at all, any, do us a favor and give us a like and subscribe on YouTube and Apple, Spotify, anything, all of them, all of them, wherever you're listening. Go ahead and like and subscribe.
And after you like and subscribe, make sure you send this episode to at least one family that you really want to see win. We'll catch y'all next time. Peace.